Hi, so today I'm going to continue the quarterly segment that I've started where I go through all the changes that I've made to my portfolio over the last quarter, and I have made some changes. So I'm going to show you how much my portfolio has gone up or down as of the 1st of October 2020, and I'll show you what I've bought, what I've sold, and what has just stayed the same. So the purpose of this is I just wanted to be transparent so that you can really understand what it's like to be an active investor. And if you are new here, well, welcome to my channel. My videos are about investments that anyone in the world can make. So every quarter, the big funds like Berkshire Hathaway, Pershing Square, Fidelity, they all reveal what's exactly inside their portfolios, which is really cool because they're also going to tell you what they've bought and what they've sold. So I thought I would do something similar and beat them to it because their information isn't going to come out for a few more weeks now. And it's good practice for me because one day when my portfolio gets really big like these funds, well, I'll have to reveal everything every quarter. I hope. So the first thing I'm going to do is I'm going to go through my buys and sells for the quarter, and then I'm going to go through my performance so far. I'll also make sure I show you my current portfolio as it stands of the 1st of October, and I'll also go through my updated wish list as well for the companies that I'm watching. So what I'm going to be showing you is what's called an unrealized gain or a loss. And what that means is because market prices are still changing and I haven't sold out of everything, well, it just means that I haven't realized the value of my portfolio. It's sort of moving still. So think of it just like a snapshot into my portfolio, because this is obviously not how my bank balance is moving, because of course I keep holding these positions. All right, so let's get into it and let's go through the changes that have taken place. Okay, so the first company in my portfolio is Alphabet, and that's Google. So I have both A-class and C-class shares, and I've bought them back in 2017, some in 2020, for the average price of $1,073. Now, I'd love to buy more, but the prices have gone way past what I'd be willing to pay for them. I'm hoping to hold these for the long term. My thesis hasn't changed at all. It's actually the same with Facebook, and actually the same with Skyworks as well. The prices have just gone far beyond what I'd be willing to pay today. But I'm really happy to hold these companies. I'm happily going to hold these for, I'm hoping, 10 years plus. Also, by the way, if you're interested in the analysis that I've done for each of these companies in my portfolio, I have videos on literally every one of these companies. So go back through my videos and find the companies that are interesting for you and watch those analysis videos. Next, we have a look at the index funds. And look, I normally don't like selling anything, but I have made some changes in this position this quarter. And I've just very recently sold down a little of my S&P 500 index funds as they were just too much of my entire portfolio. It was actually pushing nearly 40%, and I wanted to have some cash for some better opportunities. So I've actually just sold them down a little bit recently. So now we're going to take a look at some of my more recent purchases. As you can see, I bought Middleby, Bank of America, Berkshire Hathaway, and Global Cord Blood Corporation in May and June of this year. And the reason I got such good prices into these companies was because I was using my intrinsic value calculator, calculating what I think the company should be worth right now, giving it a 50% margin of safety, and then these prices were still below that. Okay, now the next four companies are my oil tankers, and I've actually added to DHT and TNK in the quarter. See, the prices were still at a good level, so I was happy to invest more. There are not many opportunities that I saw that were better than these. And actually very recently, I even added more to TNK because it hit my $10.50 price target, which was my third level price point. I actually wasn't expecting to see a price at this level, and I was very happy that I bought more at such good prices to intrinsic value. And I've also actually just recently started buying Prudential Financial. After looking through my insurance companies in my insurance analysis videos, I decided that Prudential I thought was the best investment and one of the best investments I have seen for a long time. I think the current price to free cash flow for this company is just too good of a deal to pass up. I actually have orders in place to buy more Prudential Financial, and I'm hoping that in Q4 I can pick up some more. Now, as you can see, there's a row where I have a question mark. Now, I've been buying a new position in a company that I haven't made a video on yet. And the reason is because it's this tiny little company with very low volume. Look, I wish I could talk more about it because it's a really interesting investment, but I haven't built up a good enough position in it yet. I think it's a classic Peter Lynch, Warren Buffett, Bill Ackman move where the company is distressed and performing poorly, but they have a lot of assets and the assets are just worth more than the share price is suggesting. I am actually considering becoming an activist investor in this situation because I really think that I can influence the direction of the company in a positive way. So I'm actually going to reach out for a little bit of help here. If anyone has any experience in takeovers or mergers or acquisitions of publicly traded companies, please get in touch with me. I'd be very interested to talk to you about it. So there was a little action in my portfolio over the quarter, but generally most of it stayed the same. Mostly because the prices that were on offer in Q3 compared to say April and May of earlier this year just weren't even close to the same. So just looking at Q3, my portfolio is up about 5%, and that's compared to the S&P 500, which for the same period is up about 8%. So when I compare myself to the S&P 500 for the quarter, well, I didn't do as well. And I think that's just totally okay, because I'm very confident that I'm going to completely smash the S&P 500 over a 3 to 5 year period, especially with my TIKR thesis playing out, and my other investments I think are all going to handily beat the market. So if we're looking at it from a year to date, my portfolio is up about 13%. And now that's considering the oil tanker companies that I invested in are actually down very significantly from when I bought them. And now we compare that to the S&P 500 for the year, and it's up about only 4%. But again, it's fun to compare myself to the S&P 500, but I don't really care. Because the real comparison, let's talk about that in 2025. So roughly how my portfolio breaks down is that I have 15% of my investments in the index funds, I have 25% in the oil tankers, I have 35% making up of really the rest, and 25% I'm holding still in cash. Now with these companies here like Google and Prudential and Berkshire Hathaway, they make up around about 2 to 6% each. It's a bit varied, but it's around about 2 to 6%. Now I think having 25% in cash is an interesting point. See, I'm always trying to hold around 20, 25, maybe 35% in cash because something dramatic is going to happen at some point and I just want to be ready to take advantage of it. For example, when the crisis happened in late March, early April, well, I was looking at the companies in my watch list fall to attractive levels, and I already had the cash ready to deploy. Plus, I am currently accumulating shares in that tiny little company, which I haven't revealed to yet. So I've actually earmarked a lot of this cash for that little company. So I'm planning to focus my attention on that tiny little company for the next quarter, and maybe I'll buy some more Prudential Financial along the way. Oh, and if you haven't subscribed to my channel yet, well, make sure you do so you can follow along. So as the future progresses, you can see what happens to this portfolio. All right, now let's go take a look at the updated watch list. So this is a list of my favorite companies, and they're not in any order. The second column is my calculation of intrinsic value of the company, and I use my intrinsic value calculator with an 8.5% discount rate. And the growth rates I had to estimate based on my own opinion and a little from the analysis as well. But my opinion is that analysts have no idea generally what they're even talking about. So look, it's pretty hard to trust them, and I really just have to try to make my own decision on the growth rates. The current price column is obviously what the current share price is right now. The buy price column is a function of the intrinsic value. I used my intrinsic value calculator with a 22% discount rate for most of these companies. This gives me a good margin of safety that I look for in my investments. Now, look, this is not an exact science. Some companies I gave smaller margins of safety as I think the risks are less, and some companies I gave more margin of safety because I think the risks are a little greater. So all I did was change the discount rate from the 22% to something lower for those lower risk companies like Google, for example, where I used 17%. And I put it up higher for higher risk companies like Unum, where I gave it a 30% discount rate. And now the sell price column, well, that's just a ballpark figure to remind me that maybe it's getting a little overvalued. Because sometimes a company can just go far past its intrinsic value. And once it is a long way above, well, there's a higher chance of inferior returns from then on. Look, this isn't a hard and fast rule. It's just a marker for me to look at the long-term prospects of the company. For example, if Google was to go past the $1,625 that I have here, well, I would go back and reassess the intrinsic value. If I can't revise the intrinsic value higher, then I might as well sell. Look, I know it's not a perfect method. Again, it's more of a reminder to myself that I might have better investment opportunities somewhere else. And what I really hope happens is I can just revise the intrinsic value higher based on the new financial information that I get. Therefore, the sell price will just keep moving higher and higher. Now, I hope I don't actually have to sell because the sell price that I have here, well, I hope it just keeps going up and up and up. But if the price gets crazy high, well, I do need to know that too. Okay, now let's summarize everything. So not a lot of changes this quarter. I didn't get great prices on companies in my watch list. This will be far more normal and a better reflection of what normally happens to my portfolio compared to what happened in Q2. I did have some new buys with Prudential and more of DHT and TNK. I think I do have a strong cash position, but I am using that cash at the moment for that secret investment. Now my watch list has gotten a little bigger since Q2, but I'm still looking for quality companies. Now I am turning my attention more to small cap companies because I think that's a better hunting ground. Now, I plan to update this every quarter so you can follow along and see how it progresses. I do hope this is something that you enjoyed looking at, and I hope it helped you in some way with your own portfolio. And if you appreciated this level of transparency, please make sure to give the video a like for me and make sure you subscribe to my channel to keep following along. And a big thank you for watching all the way to the end, and I will see you in the next video.